What's up, guys? Alex here, licensed CPA realtor, and I'm here with Paul. Right. So, Paul, you've been in this for a decade, right? Almost a decade.
Right.
And there's a lot of craziness that's been going on, right? And more recently, the Fed has declared that we're going to have interest rate hikes, right? So, as interest goes up, or inflation, whatever you want to call it, right? Depending on which layman you ask. Either way, it stands to reason that mortgage rates are also going to go up, right? So, I'm sure you've probably seen articles yourself, right? People are like, oh, the crash is coming, the bubble's about to burst. Like,
Yeah.
what's your take on that?
I would say we cannot predict if there's a bubble going on. All we know is that there's plans to increase the Fed rate, and it's going to affect mortgage rates. So that they're trending upwards. I think in January alone so far, it's jumped half a point.
And that's
At least, and it's still going. So there's no end in sight that I can see.
Mhm.
So for jumbo loans, you might even be in the fours.
And so, like, what would you, like, how would you explain that to, just your everyday Joe, like the jumbo loan? What does that even mean?
A jumbo loan in the New York area is like for high price loans over the conforming loan limit for Freddie Fannie.
Mm-hmm. And thankfully, if memory serves, that rate, they recently kind of raised the ceiling on that, right?
Yeah. They just jumped it up for the new year.
So, look, and this is where I think there are gonna be a lot of people who are like, oh, like it's not, I can't do it because I spoke to a guy last year. Da, da, da. If you're in the market, go talk to a lender, and just give it like it's a question, right? It's worth asking the question. Worst comes to worst, they say, look, I can't help you, right? Well, go ask another lender, right?
Yeah. It never hurts to figure out how much you qualify for.
Mm-hmm. And my take, because we're getting this asked all the time now, like, oh, but like the market's already high. It looks like it's like I'm being told it's coming down. It's coming. I'm not seeing real estate prices drop. Like, I might not see the 20% increase, right? But I'm not seeing, if the market price was $1 million, I'm not seeing it suddenly drop down to 800, right? And so with that said, loaning, like the loan side, it's still pretty stringent, right? And so can a market crash, bubble, whatever you want to call it, happen? Yes, right? There's no crystal ball for me to look at. Do I see it likely within this next year or so? No. Me personally, I don't see it, right? Again, not financial advice,
Yeah.
but...
Well, they implemented legislation to prevent bubbles from happening in the mortgage industry because of 2008.
Right. And I think it is that, right? There are other factors that could affect, right? But that's conversation for another time, right? Because it's, at the end of the day, my personal stance, right? My personal stance, not financial advice, no guarantee, all that jazz. I don't see a crash coming. I mean, eventually maybe, not right now, right? So on a buyer side, rates are going up, right? What does that mean for a buyer?
It means that depending on their ratios, they may be able to qualify for less of a mortgage. So if they barely qualify for $800,000, maybe now it's $750,000.
Right. And it's my personal stance is, if I don't want that to deter you from getting a house, right? It's just figure out where in your budget. And my personal thing is, if you can, still buy something, right? Just you might have to adjust what your affordability is, right? That might change where you're looking. So from a seller standpoint, rates are going up. What does that mean from a seller or prospective seller?
Prospective sellers, I would say, interest rate hikes, will typically limit your market for buyers, but I would say the market is still strong in the New York area, that if you have 10 offers, you might have 9, 8 offers that are valid.
Mm-hmm. And I think this is where that balance is, because I think the typical homeowner will typically get stuck on like the price, like the overall high level price, right? And I've come to realize it is obviously an indicator, right? Like let's say if the house is $1 million, it's $1 million house, right? But I think if you look into details, it gets a little interesting, right? So from a buyer's perspective, they're like, oh, it's $1 million house, I can't afford it. No. Go talk to your lender, see what you can afford, right? And this is my personal stance. If what you're approved for and what you could afford are two separate things, right? And so if you budget out what your monthly spend is going to be, like what's your taxes, what's your interest, right? Take that into account and see if you have wiggle room, right? And from a seller's standpoint, it's the thing, right? Like understand that if you want to price aggressively, you're going to be in a situation where you might not have the pool of buyers that you were hoping to get, right?
Right.
And so I think that's absolutely like an important step for people to, it doesn't matter what side you're on.
Right. I think it kind of comes down to each individual's perspective when it comes to their futures.
Mm-hmm.
Like, okay, your mortgage interest is going up, so maybe you're looking for places to earn more
Mm-hmm.
of an investment return.
Mm-hmm.
You know, property is a very good return on investment in the metropolitan area.
Absolutely.
So, it depends on how you see that going in the future,
Absolutely. And I think at some point I do want to pick your brain. So obviously this is generally geared towards your typical home buyer and seller. If it's okay with you, at some point I do want to sit with you in terms of how like an investor would kind of adjust this, how they would adjust to this market in terms of financing.
Right.
But just for the sake of time, we
Right.
will kind of save that for another time.
For next time. Yeah.
But where can people find you right now?
You can find me on my email is PChung@unitedmortgage.com. That's probably the easiest way to reach me.
Okay. So, please subscribe, and we'll catch you guys on the next one.
Next time.